So you'd like to buy some stocks or ETFs, but you're not sure which investment app to trust with your money. American YouTubers recommend Robinhood or Webull, but it's frustrating because those are not available here in Europe. Maybe you've heard about Trade Republic, Degiro, Revolut, Interactive Brokers, and you're wondering which is best in your situation. Well, I just used my 18 years of professional experience, including my time as CEO of an investment firm, to research the current top investment apps and brokerages in Europe. Unlike most reviewers online, I don't accept brokerage sponsorships, so that means I can give you my brutally honest rating for each, and hopefully that will make the choice really easy for you. Now, if you're interested in a specific brokerage, just use the timestamps below. Otherwise, let's start with the first category, the most beginner-friendly investment apps. First up, we've got Trade Republic. This is a major neo-broker, meaning a new online brokerage with a German banking license. Launched just 6 years ago, today Trade Republic is one of the most popular brokerages in Europe with over 8 million clients. As for every investment app, I will rate Trade Republic on user experience, investment selection, fees, as well as size and reputation. Now, when it comes to the Trade Republic user experience, the first word that comes to mind is elegant. The Trade Republic app has a simple black and white interface with just a few touches of color. Everything seems intuitive and easy to find. You can filter stocks and ETFs by industries, regions, and other criteria. And as one more benefit, Trade Republic is particularly convenient for investors in Germany and Austria, where your taxes are handled automatically. Unfortunately, there is one significant downside to the Trade Republic user experience. This brokerage has added millions of new users over the past few years, and this can be hard for any organization to handle. Today, many users report that getting answers to customer service questions can take a long time. And of course, if you have any kind of issue with your account, this can be frustrating. Now, most users will likely never experience this. I personally haven't. And also, as you will see from the other reviews, unfortunately, customer service issues are common with pretty much all online brokerages. But still, this is something I hear a lot about Trade Republic, so it's something to keep in mind. Overall, I would rate Trade Republic as 8 out of 10 for the user experience. Next up, we've got investment selection. So this varies a little bit by which country you are based in. Checking my Latvian account, Trade Republic has almost 10,000 stocks, over 1,000 ETFs, over 600 bonds, and even 54 crypto coins available for purchase. In other words, the selection is more than enough for most investors. Trade Republic also pays you good interest on cash sitting in your account, and as with any bank, your uninvested cash is guaranteed up to a limit of 100,000 euros. Plus, if you are based in France, Trade Republic now offers a PEA account, a special kind of account which is great for taxes. There is one downside to the investment selection, which is that Trade Republic doesn't allow you to choose on which stock exchange you buy. Instead, your trades get sent to the Lang & Schwarz stock exchange. According to Trade Republic, the price that you get is checked against Xetra, the major German stock exchange. So this shouldn't be a significant problem. But it has been a bit controversial because Trade Republic makes a lot of its income from what is called payment for order flow. In other words, they get paid when they send your orders to Lang & Schwarz, and some critics say this can result in worse prices. That said, payment for order flow only applies to German clients right now, and it's being eliminated completely as of mid-2026. And on the whole, I don't think that this is a major concern for beginning investors. So overall, I will give the Trade Republic investment selection 9 out of 10 points. Next, let's look at fees. This is a bit confusing because Trade Republic says that all trades are free, but there is a €1 trade settlement fee. So in effect, you pay €1 per trade. If you set up a regular savings plan, then investing your money every month is free, and you only pay the €1 fee when selling, so that's even better. Either way, a €1 fee is very, very low compared to most brokerages out there, so overall this is pretty great and earns Trade Republic 9 out of 10 points. Finally, size and reputation. Now, I need to be clear about something. Size and reputation does not mean safety. Any licensed brokerage in Europe is quite safe by design. Even in the very unlikely case that a brokerage fails, your money is held separately from the brokerage. It remains safe. That said, we still want to know that our brokerage is reputable and in good financial shape, because if a brokerage does get into difficulty, this means some disruptions and extra risks. Trade Republic generally has a good reputation, and it's funded by major investors such as the Ontario Teachers Pension Plan and Sequoia Capital. As a relatively new company that is quickly expanding, Trade Republic was unprofitable for many years, but according to company reports, 2024 was profitable, so that's great to know. One minor downside that I don't like is that, unlike many other banks and brokerages, Trade Republic doesn't publish its financial statements online. But given its banking license and attention from multiple financial regulators, I don't see it as a major issue. On the whole, while Trade Republic doesn't yet have the track record and financial size of the biggest brokerages out there, in my personal subjective opinion, I would give it a solid 8 out of 10 on size and reputation. Okay, and that gives Trade Republic a combined rating of 8.5. I think it's a very impressive, easy-to-use investment app that can be a great choice for beginners and for those looking for a convenient user experience, especially in Austria and Germany, but also other countries. All right, coming up next, Lightyear. This is a relatively new brokerage from Estonia's vibrant fintech scene. It was founded by some former employees of the major fintech Wise, and it's been backed by prominent investors including Richard Branson and Lightspeed Venture Partners. Lightyear is regulated in the UK for its UK clients and in Estonia for clients in other European countries. Lightyear's strong side is the user experience, especially if you're a beginner. In terms of pure visual design, this could be my favorite investment app. In the mobile app, it's super easy to check your portfolio performance, to see all your savings, all your investments. You can go to the Transactions tab and see all the account activity, which is a feature that's missing in many other applications. It's just really easy to use. To find investments, you click the search icon and then you can either look up investments by name or you can explore selections like global ETFs or sector funds or others. The only minor drawback that I would highlight is that right now you can't look up ETFs by ISIN code, but otherwise it's really quite convenient. On the whole, for user experience, I give Lightyear a strong 9 out of 10. Next up, we've got investment selection. On the stock side, you've got plenty to choose from, with over 5,000 stocks available. But I'm an ETF investor, and right now there are only 258 funds to choose from. That's enough to make a decent portfolio, but the selection really could be better. On the plus side, Lightyear has this section Savings, which allows you to invest in BlackRock money market funds. So this is a convenient, low-risk place to park your money if you don't have a high-yield savings account available. This savings section is particularly convenient because Lightyear is not a bank, so holding a lot of uninvested cash in your main brokerage account doesn't benefit from a €100,000 bank deposit guarantee. So instead of that, you can use these money market funds to keep your money safe. Another cool feature is that Lightyear offers business accounts in many European countries, which most brokerages out there do not. And if you are based in the UK, Lightyear also offers ISA accounts, which is great for taxes. That said, right now, because of the few ETFs available, I will give Lightyear's investment selection 7 out of 10 points. Next, let's look at fees. Lightyear is pretty fantastic here. Trading ETFs is entirely free. Now, if you want to buy European stocks or bonds or other exchange-traded products which are not ETFs, then you have a fee of €1 per order. For American stocks, you pay 0.1% of the trade amount, from a minimum of 10 cents to a maximum of $1 per trade. The only weak side is really the currency conversion fee, which is a bit higher than competitors at 0.35%. But overall, Lightyear's fees are wonderful, a definite 9 out of 10. And finally, size and reputation, which again, I emphasize is not the same as safety. Any licensed brokerage here in Europe is quite safe for investors. Overall, Lightyear has a good reputation as a well-designed new participant in the online brokerage market. That said, Lightyear is quite a small new brokerage, which has only a few 100,000 clients. And as is often the case with new fintech companies, Lightyear is losing money. According to the company's financial reports, Lightyear Europe is losing a few million euros per year right now. Again, this is normal for new financial companies, plus Lightyear is backed by respectable investors, and that means I've been perfectly comfortable investing some of my own money through the app. Even so, obviously Lightyear is small and new, so I will entirely subjectively rate size and reputation as 7 out of 10. Okay, and this gives Lightyear a combined rating of 8 points. I think it could be a really attractive choice for new investors looking for the simplest possible user experience. And it can also be a convenient brokerage for those who need an investment account for their company. Next up, we've got Trading 212. This is one of the most popular investment apps in the UK, and it's also quite well known across Europe. Trading 212 used to be primarily a CFD broker. CFDs, or contracts for difference, are highly speculative instruments used for making short-term bets in the market. While CFDs still make up a big part of Trading 212's income, in recent years, the company has emphasized traditional investing more and more, which is wonderful because personally, I think CFDs are toxic and should be avoided like the plague. Trading 212 is regulated in the UK for its UK clients and in Cyprus for clients in most other European countries, although they also have a Bulgarian entity. All right, so let's look at the user experience. I actually use Trading 212 a lot when I'm doing demonstrations in my videos and training programs because the brokerage interface is easy to understand. It's simple to use. One thing that I don't like is that when you log in, you get all this noise pushed at you, like the top winning stocks, the top losing stocks, all this stuff that is really irrelevant for smart long-term investors. But if you look past that, Trading 212 is really quite easy to use. The search function is excellent. You can look up investments by name or ticker or ISIN code. And it's pretty easy to browse and explore different investments as well. The portfolio overview is quite intuitive. It shows how your portfolio value has changed over time and how it's allocated between different investments. Plus, Trading 212 has a wonderful feature called pies. You can set up your own investment pie, which is split, for example, between 3 ETFs at 30% and 20% and 50%. And then you can have Trading 212 invest in this split automatically without you having to do calculations every time. Now, with Trading 212, as with most other online brokerages, I have also heard some complaints about customer service issues, but I haven't encountered any problems myself. Overall, I would give Trading 212 a 9 out of 10 on user experience. Next up, we've got investment selection. Trading 212 has over 7,000 stocks and ETFs available. That's a lot. And while the selection is not quite as wide as with the biggest brokerages like Interactive Brokers, in my experience, I could find pretty much all the investments I ever wanted. One minor downside is that you can't select the stock exchange on which you will buy your stocks or ETFs. The orders get executed automatically, and from what I understand, this is usually done through Interactive Brokers, a major brokerage that I will introduce in a moment. But for most regular investors, this is not really critical. Also, keep in mind that Trading 212 doesn't offer a lot of tax features for European investors, although in the UK they do have ISA accounts. But overall, Trading 212's product selection is quite good. I would rate it 8 out of 10 points. Next, we go to fees. And here, Trading 212 easily leads the industry. You pay 0 trading fees when buying or selling stocks or ETFs. The only thing you really pay is a foreign exchange fee when investing in a different currency, and that's just 0.15% of the amount, which is quite low compared to the competition. On the whole, it would be hard to get cheaper than this, so I'm going to rate Trading 212 10 out of 10 points on fees. Finally, size and reputation. Trading 212 is not the biggest broker out there, but it's still sizable. 2023 revenues were £160 million and net profits were over £20 million. On the minus side, while I haven't seen exact data, I get the impression that a lot of this money comes from the CFD business. It feels like CFDs are subsidizing traditional investing at Trading 212. And at least I personally view CFDs as a reputational black mark. Also, unlike some bigger players, Trading 212 is not a public company or a bank. It's a privately held brokerage owned by 2 private individuals. All this said, on the whole, I would give Trading 212's size and reputation a fully subjective rating of 8 out of 10. Okay, and this gives Trading 212 a combined rating of 8.75. If you are looking for a simple-to-use, beginner-friendly investment app, Trading 212 is pretty great. All right, so I've got some other recommendations coming up for those of you who want a more sophisticated brokerage with a longer track record, with stronger financials. But first, here's an important factor to consider. When choosing your investment app or brokerage, you also need to think about taxes. I can't cover this topic fully in one video because every country in Europe has a different tax system. But in some countries like Germany, Austria, or Denmark, you really want to have a local brokerage to make your taxes much simpler. For example, in Germany, Trade Republic and Scalable Capital are popular choices. In Austria, the choice is usually between Trade Republic and Flatex because both of these handle your taxes automatically. And in Denmark, many investors choose between Saxo and Nordnet. Taxes are also a factor in some other countries. For example, in some cases, you can actually reduce your taxes by using a special kind of brokerage. This is something I cover in the Index Masterclass, my step-by-step training program for beginning European investors. Just check out the first link below this video. But now, let's move on to the next category, daily banking apps that offer investing. If you already use these apps on a day-to-day basis, this can be really convenient because you don't need to send your money anywhere else. You can just use the same app that you use for paying for lunch to invest your money. The first one is Revolut, possibly the most widely known fintech, financial technology company in Europe. For years, Revolut has offered a super simple and convenient app for managing your daily spending and splitting bills and avoiding expensive currency exchange fees. And more recently, Revolut has started offering investments inside the app. For UK clients, investment services are offered by Revolut Trading Limited, which is a company that's regulated by the UK's Financial Conduct Authority. So if you're a UK client, basically this is regulated in the UK. For other European clients, you deal with Revolut Securities UAB, which is a company regulated by the Bank of Lithuania. Okay, first up, the user experience. On the whole, as a Revolut user myself, I love the Revolut design philosophy, and usually I'm very pleased with the app. That said, I feel like the Invest section has a lot of room for improvement, mostly because I'm an ETF investor, and I find it very hard to find ETFs in the app. When I click on the ETF section, I'm faced with an enormous unstructured list of ETFs, and I haven't discovered any convenient way to filter or screen this list. Searching ETFs by ISIN code also doesn't seem to work. That said, once you find an ETF that you want to buy, the interface is quite nice. You see the most important information you need in a convenient format, and actually making the trade is easy and intuitive. As another drawback, Revolut is another one of those fast-growing fintech companies where, unfortunately, you do hear a lot of stories about how difficult it can be to reach customer service or get problems solved. But while this is not such a critical issue if you simply use Revolut for splitting checks or spending some money while you travel, it's kind of more important when you're investing your life savings. So with that in mind, I would give the user experience 7 out of 10 points. Although if you are a heavy Revolut user, you might bump it up to 8 out of 10 just for the convenience. Next up, we've got investment selection. According to the Revolut website, they have several thousand stocks available for investors in Europe. I don't have the numbers for ETFs. A year ago, it was just a few hundred. Now it feels like it could be 1,000 plus because I keep scrolling through the list and it just keeps on going. Revolut also allows you to invest in a selection of bonds and commodities, specifically gold, silver, platinum, and palladium. And if you like high-risk assets, you have access to CFDs as well as cryptos. Finally, Revolut also has a robo-advisor service, although with a fee of 0.75% per year, it is way too expensive in my opinion. As a minor downside, Revolut doesn't let you select where to buy stocks or ETFs. It seems that all trades get automatically executed via an intermediary called Upvest. On the whole, I would rate the Revolut investment selection as 8 out of 10. Now let's look at fees. Here, your experience will depend on whether you are already paying a monthly fee to Revolut to get a higher level of service. Every client level gets an allocation of free trades per month, starting from 1 trade for standard accounts all the way up to 10 trades for metal or ultra accounts. Beyond these free trades, the fee is 0.25% of your order value, with a minimum fee that depends on the country. In my case, in Latvia, it's €1. There's a lower 0.12% fee that applies to ultra or trading pro customers. The standard Revolut currency exchange fees also apply when investing. So that means you get a free currency exchange allocation depending on your client level, and then you have to start paying above that. On the whole, for standard level clients, I would rate Revolut's fees as 7 out of 10 because they are relatively high for an online discount brokerage. But if you are a Revolut Power user, if you are already paying a substantial amount of money for your Metal or Ultra subscription, then you can probably bump this score up to 9 or 10 and essentially do all your investing for free. Next up, we've got size and reputation. Revolut is one of the biggest fintech companies in the world, and recently it has become strongly profitable. Annual revenues in 2024 were over £3 billion, and annual profits reached almost £800 million. And Revolut has £2.6 billion in equity capital, so that's quite impressive. One little nuance to keep in mind is that uninvested cash in the app is not held with Revolut's banking arm, it's held with the investment arm. So the €100,000 bank deposit guarantee doesn't apply. Basically, if you want to invest, you put money into the invest section and then invest it. Don't just leave it sitting there. Other than this, well, up until a few years ago, Revolut had some reputational issues because its annual reports got published late and they were criticized by Revolut's auditors. But it seems that these issues are now in the past. So overall, as a major global fintech with improving financials, I will subjectively rate Revolut's size and reputation as 9 out of 10 right now. And that gives Revolut a combined score of 7.75 from me. I see Revolut as an attractive choice for those who already use this app for their daily banking needs, especially if you want to start investing small amounts of money. For major long-term investments, I would still prefer to go with a more established, dedicated brokerage. Now let's look at the other big name in the neobank space, N26. N26 isn't as big as Revolut, but according to the company, it has over 4 million paying customers, so it's a very substantial online bank. N26 first launched its stock and ETF investing in Austria and Germany in 2024, and then they quickly expanded to many other European countries. I'll put the current list on the screen so you can check if your country is covered. N26 is licensed as a German bank, so it's supervised by German regulators. All right, let's take a look at the user experience. I confess I'm not a daily N26 user yet, but focusing on the investment section, the app design seems really cool. It's simple and intuitive. I really love the browse function where you can filter the list of ETFs by issuer, index, region, and industry, while stocks can be filtered by region and industry only. When you select a fund, you get a clean overview of costs and other really important information, and that makes it easy to understand what you are buying. The purchase process is also simple and intuitive. Arguably even too simple, because right now it appears you can only use market orders. And that means you ask N26 to buy the stock or ETF that you want at the latest available price. Hopefully they will add the ability to use limit orders as well, so that you can control the price that you get. Another great feature is that you can easily set up an investment plan, which makes automatic investments for you every month. N26 also offers something called ready-made funds. Basically, these are baskets of index funds and ETFs, which combine stock and bond funds based on your selected risk level. But this feature comes at a significant extra cost, which means that I personally wouldn't really use it. Unfortunately, as with Trade Republic and Revolut and other fast-growing fintechs, I do see a lot of negative reviews online about the customer support at N26 and problems with frozen accounts where it's hard to reach a real person and get any kind of sensible answers. To be sure, your account can get frozen at any financial company because of regulatory requirements, but the sheer volume of complaints that I've seen about N26 does make me a bit cautious. So given all this, I would give N26 8 out of 10 points on user experience right now. Next up, investment selection. On paper, N26 has a good selection of stocks and ETFs. In an email, a company representative said they offer more than 2,000 stocks. In Germany, the number of ETFs you can buy is over 1,700, while in Spain it's over 1,500. But I'm based in Latvia, and I've got literally just 18 ETFs available. I suspect it might be a similar situation in other smaller or Eastern European countries. So if you're in Western Europe, the investment selection might get an 8 or 9 from you. But I'm gonna rate this as a 7 out of 10, because I find it a bit disappointing when smaller European markets don't get a good level of service. Next up, we've got fees. Initially, N26 did charge fees for investing, but today you can buy and sell stocks and ETFs completely free. So that's really awesome. If you use one of N26's ready-made funds, you do face some significant fees ranging from 0.29 to 0.59% per year, but nobody's forcing you to use these ready-made funds. And as long as you buy individual stocks or ETFs, you can invest completely free. So I'm going to give N26 10 out of 10 points here. Next up, size and reputation. N26 is one of the best-known neobanks in Europe. It's got reputable investors and a good reputation overall. With 4 million clients, it's not the biggest player in the market, but it's quite sizable. While N26 doesn't publish financial statements, which is a minus in my book, according to the company, it had its first profitable quarter in 2024. Customers benefit from the N26 banking license, which means that if you've got uninvested cash sitting in the account, it's protected up to 100,000 euros by the bank deposit guarantee. As a negative on the reputation side, N26 has had some bad press over the past few years for a few different reasons, such as high employee turnover, frozen customer accounts, and the decision by the German regulator BaFin in 2021 to restrict the number of new accounts that N26 was allowed to open every month. Now, this limit was removed in 2024, so it looks like that's in the past. Overall, I would rate N26's size and reputation as an 8 out of 10, and that gives N26 a combined score of 8.25. As with Revolut, I would primarily recommend N26 to beginning investors who already bank with N26 and who want to start investing in a convenient way. For sophisticated investors who are looking to invest large amounts of money, I would probably look for a larger and more established brokerage. Which brings us to our next segment. What if what you really want in a brokerage is size, sophistication, and a really strong reputation? Well, I've got a few great recommendations here, including several brokerages that I use to invest my own money. But first, there's one really important principle that you need to understand. Not knowing this cost my friend Alex 10,000 euros. Last year, Alex was scrolling on Facebook when a message popped up from Tom Crosshill, me. Hey Alex, I've discovered this really cool new brokerage. You should check it out. Here's the link. Alex trusted me, so he clicked the link, went to the brokerage website, which looked nice, and signed up. A few weeks later, he messaged me on LinkedIn and said, hey, listen, investing is going great on this app. Should I put in more money? And I was like, what app? That wasn't me on Facebook. It was a scammer pretending to be me. Unfortunately, every bank, brokerage, investment trainer, and financial educator today has scam accounts that copy them and message people to steal their money. This is impossible to stop. We've reported them to the police. We've reported them to the platform. Nothing really gets resolved. But you can stay safe quite easily. Never ever click a link to an investment app or a brokerage if anybody sends that to you over WhatsApp or Telegram or Signal. Always go to the brokerage website directly. And keep in mind, the only links that I'm going to put under my videos are either to my newsletter for European investors or to my training program for beginning investors in Europe, which, by the way, is really cool. You really should check it out below this video. Okay, but here's the final category, the biggest, most reputable brokerages for European investors. And when it comes to big and reputable, it is hard to beat the industry heavyweight, Interactive Brokers. Publicly traded on NASDAQ, Interactive Brokers is the most prominent online brokerage in the world, and it serves European investors out of subsidiaries based in the UK and Ireland. For many years, Interactive Brokers was actually my #1 recommendation for European investors, and I still think it's a fantastic choice for many, although it can be challenging for beginners. And that's because of its only major drawback, the user experience. Interactive Brokers is possibly the most confusing and unintuitive brokerage that I have ever used in my life. To start, on the Interactive Brokers website, you will discover 8 different platforms that you can use, including 3 different mobile apps, 2 desktop apps, 2 web apps, and the ability to trade via API. Looking up investments is super confusing, where you have to use this external website called the IB Contract Information Center to make sure that you have selected the correct stock or bond or ETF. Interactive Brokers uses ancient acronyms for everything, like IBIS-2 for the Xetra Stock Exchange, although IBIS was the name of the predecessor for Xetra, which hasn't existed for 30 years. And getting Interactive Brokers to produce a simple report about your deposits and withdrawals, or the trades that you've made, can be a real hassle. If you are a sophisticated trader or investor, Interactive Brokers is fantastic because it's got every feature that you could imagine. But for beginning investors, it can be a real struggle to learn how to use it. So I will rate the user experience at a generous 6 out of 10. Happily, everything else about Interactive Brokers is much, much better. On investment selection, Interactive Brokers has pretty much everything under the sun in terms of stocks, bonds, and ETFs. They have probably the widest product selection in the European brokerage market. And what's particularly great, the selection doesn't get reduced for smaller countries or Eastern European countries, like with many other brokerages. Plus, if you live in Switzerland or Norway or another country outside of the EU or the UK, you can also invest directly in American ETFs. You can trade on many different stock exchanges, and while by default Interactive Brokers will use so-called smart routing and find the best price on any of the available stock exchanges, you can also manually select which stock exchange you want to trade on. Basically, with Interactive Brokers, you can buy pretty much any reasonable investment product out there, so I give them an easy 10 out of 10 on investment selection. Next up, fees. Interactive Brokers is not a super low-cost brokerage, but its fees are very competitive. Typically, you pay a minimum of 2 to 3 euros when buying ETFs on a European stock exchange, for example. And then if your trade size gets bigger, then you're paying 0.05% of the trade amount. Now, there's a lot of complexity to how the pricing works, but that's a typical example. Because of Interactive Brokers' smart routing feature, which finds the best price at many different stock exchanges, you often end up getting a better price overall compared to other brokerages, even if the fee is a little bit higher. Interactive Brokers has also by far the lowest currency exchange fees that I've seen at any brokerage anywhere. In fact, they are so low that they have put rules into place where they say you're not supposed to just put money into Interactive Brokers, exchange it to a different currency, and then take it out. There's a minimum $2 fee every time you exchange currencies, but otherwise you pay only 0.2 basis points, which is 0.002% of the trade amount. It's thousands of times cheaper compared to your typical traditional bank here in Europe. So when it comes to exchanging currencies, nothing beats Interactive Brokers. Now, the one downside of Interactive Brokers fees is that the fee schedule is complicated. It can be hard to guess ahead of time exactly how much you will pay in fees for a trade, but usually at the end of the day, you will be pleasantly surprised. So I would rate the fees at 9 out of 10. And finally, you've got size and reputation. Interactive Brokers has been offering brokerage services since 1993. It's got 3.6 million clients, almost $600 billion in client assets. Many other banks and brokerages base their investment services on Interactive Brokers' infrastructure. They also have a strong A- credit rating from Standard & Poor's. This is not a bank, so your uninvested cash doesn't get the 100,000 euro protection, but otherwise, there's really not much to criticize. In my personal subjective judgment, Interactive Brokers gets 10 out of 10 on size and reputation. So that gives Interactive Brokers a combined rating of 8.75. In short, Interactive Brokers is my top recommendation for sophisticated investors and those with big portfolios who want a reputable, technically capable brokerage. If you are a beginner, Interactive Brokers can be okay, but you need to be ready for a steep learning curve. Chances are you will get frustrated by the user experience at some point. Next up in the heavyweight category, we've got Saxo Bank. This is another investing powerhouse with a history that spans 3 decades, and it's got banking licenses both in Denmark and in Switzerland. I personally invest a lot of my money through Saxo, but as we'll see, it does have some significant drawbacks depending on the country where you live. First, let's look at the user experience. I would call Saxo a medium between the really simple minimalist experience of neo-brokers and the difficult-to-use technical experience that you have at Interactive Brokers. Saxo is a big, sophisticated brokerage, so there are a lot of features, different settings, different buttons, which can be confusing for beginners. But in my experience, the layout and the interface are fairly intuitive. They are easy to use. My personal experience with Saxo customer support has also been decent, and Saxo offers local language support in many markets, which is great. At the same time, I do see a lot of complaints about slow or unhelpful responses online, so perhaps I've been lucky. Still, I will rate the Saxo user experience as 8 out of 10. Next, investment selection. On the one hand, Saxo is a major brokerage with a huge selection of stocks, ETFs, bonds, and other investments. In theory, you can get pretty much anything you want at Saxo. On the other hand, this is only really true if you live in a major Western European country. Because of the way Saxo interprets European regulations, the ETF selection in smaller and/or Eastern European countries is pretty bad. For example, as an investor from Latvia, I don't have a single MSCI World ETF or FTSE Developed World ETF available. The good news is that you can check the list of available ETFs in your country on the Saxo website before you open your account. On the plus side, Saxo has helpful tax features in a number of countries. For example, it offers ISAs in the UK, PEA accounts in France, and ASK accounts in Denmark. Overall, I will rate the investment selection as 8 out of 10, which is an average between 6 out of 10 for Eastern Europe and probably 10 out of 10 for big Western European countries. Now we come to fees. This is also a mixed bag depending on where in Europe you live. In a few markets, including the UK, the Netherlands, Norway, Sweden, Finland, and Iceland, Saxo actually charges a custody fee. This is a fee which grows with your account size. Basically, I wouldn't choose Saxo if I lived in one of these countries for this reason alone. In a few other markets such as France, Poland, Belgium, Italy, and Denmark, there is no custody fee at all, so that's wonderful. In other European countries, there is a custody fee, but you can disable it if you allow Saxo to lend out the securities on your account. In other words, if you enable securities lending in your account. This is something I have done for my own account, but I'm not super happy about it. Securities lending is quite safe, but it does add a layer of extra risk that I don't want to take with my assets. So I hope that Saxo will change this going forward. Otherwise, stock and ETF trading fees are pretty reasonable, with a minimum fee of 2 to 3 euros when buying ETFs on Euronext or Xetra, for example. And the same as with Interactive Brokers, if you invest larger amounts, a percentage-based fee kicks in, for example, 0.08% for trades on Xetra. Because of this custody fee issue, though, I would rate Saxo fees at 7 out of 10 points right now. Finally, on size and reputation, Saxo is really quite strong. With 3 decades of experience, with an A- credit rating from Standard & Poor's, I personally see Saxo as the next most reputable brokerage for investors in Europe after Interactive Brokers. As with Interactive Brokers, many other banks and brokerages rely on Saxo infrastructure to provide investment services. Plus, Saxo has a banking license, so in most countries, your uninvested cash benefits from the bank deposit guarantee. Overall, I'd give Saxo's size and reputation 10 out of 10 points. So that gives Saxo a combined rating of 8.25. It's a great choice for sophisticated investors and those with bigger portfolios, especially if you live in one of the markets where Saxo doesn't charge a custody fee. But I would avoid it if you have to pay a custody fee or if you are based in Eastern Europe and don't have a good selection of ETFs. Okay, and now we come to Degiro, which is part of the publicly traded German bank flatex Degiro. It has a shorter history and smaller size than Interactive Brokers and Saxo, but the fact that this is a publicly traded company in combination with its banking license is why I put Degiro in the same heavyweight category. I invest part of my personal portfolio with Degiro as well. First up, let's look at the user experience. On the whole, Degiro is quite easy to use. The user interface is not quite as elegant and refined as with Trade Republic or Lightyear, and there is a little too much unnecessary information being pushed at you about market news and winners and losers and all that stuff. But other than that, using Degiro is quite simple. It's easy to find ETFs by name, ticker, or ISIN code. There's a convenient product browser which lets you filter stocks or ETFs by various criteria, and placing orders is straightforward. As with other online brokerages, I have seen some complaints about customer service, but probably less than in other cases. Overall, I will give Degiro 8 out of 10 points on user experience. Looking at investment selection, while not quite at the level of Interactive Brokers, Degiro has a wide selection of stocks and ETFs. You also have access to a few hundred bonds, over 100 actively managed mutual funds, and high-risk products like options and futures as well. One thing to watch out for is that the product selection depends on the country version of Degiro that you choose. When you initially go to Degiro.com, you can choose between different versions of Degiro. And if you choose a smaller country like Greece, then Because of regulatory reasons, your selection of ETFs will be much smaller. But the good news is you can just choose to use Degiro Ireland, even if you don't live in Ireland, and that gives you a wide selection of ETFs. On the downside, Degiro doesn't offer any tax-advantaged accounts in any countries that I'm aware of. Even in Germany, your taxes are not handled automatically, as with other local brokerages, even though Flatex Degiro has a German banking license. Another drawback that many people don't like is that at Degiro, they always have the right to lend out your assets, your stocks or ETFs. While this is a common practice with brokerages and it's quite safe, it's still preferable to be able to turn this off if you like, and at Degiro you cannot do that. But overall, I would rate Degiro's product selection as 8 out of 10 right now. Next up, we've got fees. Most ETF trades at Degiro will cost you €3 per trade. Although there is a selection of so-called core ETFs, which cost you €1 per trade, as long as you observe a few rules. There's also a €2.50 annual fee for every stock exchange on which you have traded or hold a position. And then there's the currency exchange fees, which I don't really like very much. You pay 0.25% of the trade amount, but the problem is you don't get to choose when to exchange currencies. As soon as you sell a stock that was traded in dollars, for example, Degiro will automatically convert the currency to euros and you have to pay the fee. You can't keep the dollars around in your account. Now, it is possible to disable this so that you can keep some dollars or other currencies in your account, but then you can only exchange currencies by putting in a manual order which costs €10. Plus 0.25% of the trade amount. So to me, this looks like Degiro decided currency exchange is how they're going to be making a profit. And if you're planning to invest in foreign currencies a lot, I would avoid Degiro just for this reason. All that said, overall, Degiro is quite affordable. I would rate Degiro's fees as 8 out of 10. Not bad, but also not the best. And finally, size and reputation. While maybe it's not quite a match for Interactive Brokers and Saxo, Degiro is quite a large and reputable brokerage. As part of a publicly traded bank, Degiro gets a lot of careful attention from multiple financial regulators. It's got over 3 million clients and over €75 billion in client assets. On the whole, I would rate Degiro's size and reputation as 9 out of 10. And this gives Degiro a combined rating of 8.25. It's a solid choice for investors looking for a strong, reputable brokerage with low fees and a simple user experience. It's not the best in any single category, but it's pretty good all around. All right, now it's time for the final results. But first, if you live in Europe and you would like to start investing, you might enjoy my step-by-step training for beginning investors, the Index Masterclass. Just check it out in the link below this video. So here's the final summary. When it comes to simple, easy-to-use investment apps, we can look at Trading212, Trade Republic, or Lightyear. They are all great, but from me, Trading212 gets top marks. If you already use Revolut or N26, either one of those can be good choices when starting out. But if you prefer a major established brokerage, I would look at Interactive Brokers, Saxo, or Degiro. And out of those, Interactive Brokers gets the best marks, with just one significant downside. Be ready for a rough user experience. And next up, watch this video where I explain my system for choosing the best ETFs here in Europe.